Bajaj Finance perks up after the company elevates storied executive Rajiv Jain to Vice Chairman from Managing Director and Deputy Managing Director. Anup Saha will be the Managing Director. Analysts share the announcement, the stock among the top gainers on the Nifty.
Private equity major Bain will pick up 18% stake in Manappuram via preferential allotment of shares and equal proportions for over 4,800 crore rupees. An open offer for 26% equity will follow, giving Bain control of the gold financier.
The Defence Acquisition Council has cleared procurement proposals worth 54,000 crore rupees in a bounty for vendors like Bharat Dynamics, Bharat Electronics. The council has also approved guidelines to shorten procurement timelines.
Ola Electric confirms the receipt of inquiries from the ministries over discrepancies in its sales data compared to the Vahan registration figures. The EV maker says that the backlog in registrations is at the root, even as states shutter some showrooms for the lack of certification. We're counting down to the end of what has been a fantastic week for the Bulls. You're watching Halftime Report on CNBC-TV18. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me as always is Mangalam Malu. Some great going for the Bulls. We're expecting some consolidation today, but the Bulls wanted to end the week on a high and they seem determined to do so.
Yeah, it seems like, the earlier part of last week, it was Bulls clawing back. Then there was Bulls fighting back. And now it really looks like Bulls are on top and well in control. The true test of that was this morning where we got that dip coming in on the IT index. What's interesting is all of this week, all the sectoral indices have ended, or rather are looking to end in the positive terrain. And if you look at even the most underperforming index, which is the IT and the FMCG indices, they've gained about 2%. The IT index this week is up 2% with all the news that has been thrown around it. The FMCG index as well, with all the valuation related concerns, growth slowdown related concerns and everything that is taking place, that index too is up by about 2%. So there is an across the board sort of move taking place in the market, with obviously the high beta names, the likes of Realty, public sector enterprises, auto, small caps and mid caps doing a lot better as well. So fair to say it is a roaring rally from the lows that we've seen on the indices, nearly 1,350 points and counting on the Nifty from the lows itself. And it's also backed by news, important news coming in from Bajaj Finance, which is now among the top Nifty gainers after the company's elevated Rajiv Jain to the post of Vice Chairman for a 3-year period from here on. This was one of the concerns. We had Sanjeev Bajaj speak about that as well. And now that this has happened, what have brokerages made of it?
It was this very important overhang that you just mentioned, right, with what is going to happen to Rajiv Jain once his term comes to an end. That was addressed last evening. They've elevated him to a position of Vice Chairman, and with absolute clarity as well for a 3-year period. Anup Saha, who's the Deputy Managing Director, will take over as the new MD. And we had signs of it, as you just mentioned. Sanjeev Bajaj, when he spoke to us exclusively earlier this week, he mentioned that Rajiv Jain is very committed to the business, and Rajiv Jain himself had made his intentions very clear during Bajaj Finance's previous earnings call, and he had mentioned that he intends to remain at the company. Hopefully he'll be actively involved in shaping strategies as well, and that's exactly what has happened last evening. And brokerages have taken this announcement extremely positively. Price target raises across the board for Bajaj Finance. BofA Securities has raised its target to 10,500. They have called this execution transition plan well executed with leadership clarity, and they also say that the earnings are also at an inflection point as NIMs continue to recover for Bajaj Finance and credit costs also peak. Citi has raised its target by another 1,000 rupees to 10,200. It was 9,060 earlier. Now they're saying that this leadership continuity and strategic clarity, it is now lending more credibility to Bajaj Finance for its execution, as well as the concerns around this management transition have been mitigated. Morgan Stanley had put out a scenario analysis which we had covered earlier in the week as to what will happen if and when Rajiv Jain stays on at Bajaj Finance. That too has raised its target from 9,300 to 10,500. It remains overweight on the stock. It now says that this will improve investor confidence and sentiment. Now the investment thesis for Bajaj Finance is the strongest and the clearest among all the large cap private financial companies, and it is expecting this recent re-rating that Bajaj Finance has had to sustain, and still expects strong returns to continue over the next 12 months. And lastly, CLSA, who has the highest target on the street for Bajaj Finance, 11,000 rupees on this is what they are expecting from 10,000 earlier. Their top pick. The focus now back to fundamentals after this has been addressed. The credit costs are peaking. They're expecting that to moderate in FY26, and over the next 2 years, they're expecting the profits to grow at a 26% CAGR. So positive commentary all around coming in for Bajaj Finance. The stock at record highs, among the top gainers on the Nifty, and of course the top gainer so far this year, now well up over 30% for 2025.
It's a big move that we've seen on Bajaj Finance itself. But let's talk about the IT space, because that's been in focus. It had been underperforming earlier. Yesterday was good on account of recovery that we saw on the Nasdaq, but this morning opened weaker, largely because of the bellwether Accenture's commentary, which remained weak. But do Indian stocks actually get impacted by it or not? What does the recovery say? We have Rima joining in to give us all the details. Rima.
Thanks so much for that. But first, let's start with why Accenture ended down 7% despite raising the lower end of its full-year revenue guidance. They're now talking about a 5 to 7% kind of growth this year versus their earlier guidance of 4 to 7%. The reason is uncertainty surrounding the revenues that they get from the US government. The US government accounts for 8% of Accenture's revenue. Now, because of DOGE and the entire efficiency cuts, only mission-critical work will continue. The rest will be cancelled or scrapped. And therefore, there is still a lot of uncertainty. That's what the management said in the conference call yesterday, and that spooked investors. But that said, Indian IT companies' exposure is fairly limited to the US government. Let's now get to what brokerages have said. Now, Ambit says the commentary has turned incrementally cautious. 3 reasons. One, the company is talking about elevated uncertainty generally, given the geopolitical environment, etc. Secondly, the management also spoke. The Accenture management said that discretionary spending is still, restrained at the lower end for smaller deals. At the larger end, there is no pickup, so it's status quo. But at the lower end, discretionary spending is more constrained compared to before. And third, the reason, as I said, heightened scrutiny around US government contract. For Indian IT, Ambit says that they're expecting below COVID growth, margins and cash generation, but valuations are at a premium to the COVID levels. So that's the view from Ambit. Jeffries too says that Accenture's Q2 performance was healthy. We've seen strong growth in North America, BFSI, but deal bookings were weak, and there is increasing pressure on discretionary spend. They also say that Accenture's guidance implies a soft second half of the year, 2 to 4% kind of growth, and there is risk to Indian IT companies' growth estimates for the coming year. Infy and TCS are their top bets, and Coforge in the mid-cap pack. Nomura, on the other hand, has a slightly more bullish call. Their view is that in FY25, growth has bottomed out for the Indian IT companies. The recovery will take some time, but it's unlikely to deteriorate further from here on. They prefer Infy and Cognizant in the large cap space and Coforge in the mid cap space. Back to you.
Indeed, Rima, thanks a lot for that. Infosys and Wipro are the only 2 names on the IT index that are still not recovered or gone into positive territory. They've recovered from the lows, but still remain in the red. Infosys down 1.5%, and Wipro too was down almost 0.5% and has now gone into positive territory. And so the IT index too, at the highest point of the day, 0.5% higher now for that index. By the way, the Nifty at one point had hit 23,360 at the highs of the day. We continue our coverage on the markets, but after this short break. But before we do that, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. The nominations are now open. You can scan the QR code now and submit your entries for the SME Champion Awards Season 2. Welcome back. We addressed 2 of the 3 major newsmakers earlier in the day, and those were IT and, of course, Bajaj Finance. The third one is Manappuram, and that stock is at a record high now after Bain Capital announced plans to buy 18% stake via preferential issue of shares and an additional 26% through an open offer. Sudarshan is here with the contours of that. Sudarshan.
We are seeing big gains in Manappuram Finance stock. Stock is currently up more than 6%. It's after the company has announced the long pending deal, and there were so many reports that company would make a deal with Bain Capital, and finally the deal has come. Bain Capital is looking to acquire up to 42% stake in Manappuram Finance, and the deal is valued at more than $1 billion, or say more than rupees 10,500 crore. Now the deal would happen in two parts. In the first part, Bain Capital will be acquiring up to 18% stake, and this will happen via issuance of equity and warrant in the same proportion, and will happen at rupees 236 per share, which was at 10% premium to yesterday's closing price. And if you take the average price of last 6 months, it was done at a premium of almost 30%. In the second part, Bain Capital will bring in an open offer to acquire up to 26% stake. And for this also, the price is same, that is rupees 236 per share. What would happen to the shareholding? Currently, promoters hold around 35 or a little more than 35% stake. Once the deal is done, promoters' holding will come down to less than 29%, around 28.9%, and Bain Capital's holding, if the open offer is completed and this 18% stake is done, its holding will increase to 42%, exactly 41.7%. Apart from this deal announcement, company has also made an announcement related to Asirvad Microfinance. If you remember, Asirvad Microfinance had filed for an IPO. Now the company has announced that because of this deal, Asirvad Microfinance will withdraw its DRHP process. So it's a win-win situation for both Bain Capital and Manappuram Finance, and that's the reason you are seeing a big move, because this deal was long pending.
Long pending deal and has happened so far. Let's see where it goes from here. The stock has entered F&O ban yesterday, but the open interest decline that we've seen, it's still a fair way away from exiting F&O ban, but the ferocity with which the open interest is declining, I wouldn't be surprised if it does get out of F&O ban or not. Not particularly sure on that, but there is a distinct possibility. So we'll keep an eye out on that. This morning we had spoken about how, as this year ends, we'll see a lot more order wins come by. A lot of that has happened, and as we speak, the ticker team is abuzz with all these orders. This one comes in for Adani, is worth nearly around 2,800 crores. But one stock on our radar is Ola Electric, always in the news for the last 10 days or so, on the back of multiple discrepancies in sales and vehicle registration data. Today, the stock is higher after seeing a bit of volatility in the earlier part of the week itself. Parikshit joins in with, the entire story here, the acquisitions and what the company actually had to say on something like this. Parikshit.
Right. Ola Electric has been facing multiple questions from regulators and from government departments handling PLI and the PM E-Drive scheme, and also the Motor Vehicles Regulation Act. Essentially, these queries have been around trade certificates and mismatch in sales data. A CNBC-TV18 newsbreak has now been confirmed. Yesterday, we had reported how the Ministry of Heavy Industries is looking into the mismatch in data as to what Ola is reporting for February in terms of 25,000 vehicles sold versus 8,600 vehicles registered on the Vahan portal. So the Ministry of Heavy Industries is trying to understand why this discrepancy is there. The Ministry of Road Transport is also sending them queries. In fact, we learned from sources that a second letter has been sent to Ola Electric with more specific questions about why valid certificates are not available for all these showrooms that are there in the country. We are also learning that outlets in Maharashtra have been sealed. This is what the Maharashtra Transport Commissioner Vivek Bhimanvar told CNBC-TV18, that 34 outlets of Ola Electric have been sealed pending investigation. They were found not to have valid trade certificates, and showrooms are facing inspections in several other states, including Madhya Pradesh, Punjab, Karnataka, and 36 scooters have been seized in Maharashtra alone. In fact, sources are telling us that several of the 3,500 Ola Electric stores across the country do not have valid trade certificates. Now, this is something that the Ministry of Road Transport is also looking at. In terms of sales, Ola Electric sold 8,600 vehicles in February 2025. This was as per Vahan data, the vehicle registration data of the Ministry of Road Transport. In March so far, 11,781 vehicles have been registered. CNBC-TV18 has sent a number of queries to Ola over the last few days as to how much of these March registrations are for Feb or for the backlog. There were no clear replies. But now in a stock exchange filing, the company has said that temporary backlog in February is due to negotiations with our registration vendors. 40% of the Feb backlog has been cleared, but clearly Ola Electric has a lot of replying to do. Several RTOs in the country have sent them notices. They will have to reply to that in order to get their showrooms unsealed, get their scooters back as well, and those replies will also have to be sent to central government departments such as the Ministry of Heavy Industries and the MORTH.
Right. In fact, let's listen into the Maharashtra Transport Commissioner speaking exclusively to CNBC-TV18 on this issue, and these are the points that he had to make on this issue.
One complaint is received to Honorable Minister of Transport Maharashtra, which he has forwarded to me. And it is alleged that the Ola Electric is operating without a trade certificate. On the basis of that complaint, we inspected about 34 premises in Mumbai, and we found that these premises, they were some vehicles were kept there. There were the lithium batteries also, and the premises didn't have the trade certificate. The RTO, the respective RTO, they have issued the notice to them, and on getting the reply from them, we'll take the further action. Around 36 scooters have been confiscated. I mean, they were impounded, not confiscated, they are impounded. And as when we'll get the response, the RTO will verify the response and will take the further action as per the law. See, as per the Central Motor Vehicle Act, if the place from where you are registering or you are selling the vehicle has to be registered with the RTO department, and they must obtain the trade certificate. We found that they didn't have the trade certificate for this premises, so the notice has been given to them. See, the registering authority has to take the action. The respective RTO, depending upon the response, they will take the action as per the law. So we have to just wait for them what action they will take, because I am yet to get any report from them, and the registering authority is the RTO. But right now, this premises has been seized and they are not operating from that premises.
Important developments there with regards to Ola Electric. We take a short break. The Nifty is still around that 23,350 mark. On the other side, Apurva Sheth, the head of research at Samco Securities, joins in to give you a quick chart check and some trading ideas. Stay tuned.
Welcome back. Just 200 points. When we started the show, we said the bulls are back now. It looks like bulls are on a bit of a rampage right now. It's very close to that 23,400 mark. Yesterday itself, we thought the possibility of 2350 would be, seeing some bit of supply. Were that not to happen, there would be a short squeeze. That happened towards the end. 23,300 was where a lot of the punt buying on the calls were, and now as we speak, it's 23,400, just beneath the skin of its teeth. This morning, when Hormaz and I were there at 10:30, we were raising the bat on a 100-run uptick for the Nifty. Now it's going to 200, so double century out there. So good time to get in the F&O perspective in the market. If you look at it, the frontline indices, all of them doing extremely well. The Nifty Bank, which was an earlier underperformer at open, has now become an outperformer. IT continues to do well. We have the mid and small caps, which already were outperforming and continue to rally harder as well. If you look at the advanced decline as well, 2,100 stocks, 573 stocks in the red. Again, looks like a train track itself, with red and green being fairly wide apart, and that distance being maintained through the course of trade itself. Now that the Nifty has moved higher, it's important to look at the next important technical level. The Nifty Bank this morning went ahead and crossed the 100-day moving average. 50,374 is what it is, and the Nifty Bank is at 50,500. The Nifty, were it to cross the 100-day moving average, it would have to cross past the 23,532 mark. So that's something we'll watch out for. As the market's moving higher, we are seeing put writers, increase their levels as well. So 23,200 put fairly active, telling you support has moved higher. Not just that, 23,300 put itself is extremely well bid, currently close to around 100 rupees on premium out there. So 23,200 is an important support. On the way up, 23,500 is something that we'll be looking at as the next leg of supply, if at all, because call writers are active there for a premium of 50 to 80 rupees. But were that to not happen, then maybe, there is some punt buying which is taking place for the next week at 23,700 as well. Will that happen or not is the big question. In fact, from yesterday's close itself to now, there has been a near 200% jump on the 23,700 call. So if you put in, say, 100 rupees, that would be sitting on a 200 rupee up move in just one trading session. So that's the kind of move that we've seen in the options. So we'll watch out for how that pans out. In terms of individual stocks, a lot of long positions added on. Titagarh Rail Systems, Max Healthcare comes on our list as well. But a couple of stocks which would be in focus on account of exiting and entering F&O ban. NMDC is the one that stands out, may enter F&O ban today. But we'll also look at SAIL, which may exit F&O ban today. So one steel company goes in, another steel company goes out.
Indeed, and a double hundred indeed on the index as well, nearing 23,400. No, just drawing a retracement line from the highs that we made last September till the lows that we made today. The 38.2% retracement level comes up to 23,589. That's the 38.2% retracement line that was coming up.
And just as we speak, a word on the rupee as well. This morning we said that, there is some consolidation that we're seeing in the dollar index from 103.5, it's gone to 103.9. But that hasn't weighed on the rupee. In fact, the rupee has only gotten stronger. This morning it opened about 15 paise, stronger versus the dollar yesterday, and now it's further gained about 7-8 paise as well. So it's currently at the high point, and the weekly gain on the rupee is actually the highest that we've seen all the way since Jan 2023. So that's a big positive coming in, with prospects of more money coming in today on account of the FTSE rebalancing as well. So about $1.4 billion likely in.
Almost $1 billion worth of passive flows that you're anticipating as well, right? So we keep an eye out on the last half hour of the session as well. But where's the Nifty headed? Well, Apurva Sheth, the head of research at Samco Securities, is joining in now. Apurva, good afternoon. Thank you for joining in. Is the path to 23,600 clear now for the Nifty after this kind of week that we have had, or do you expect some consolidation, use the dip as a buying opportunity? Also, give us your stock recommendations as well for the afternoon.
Thank you for inviting me on the show, and good afternoon. So we are not at all surprised by the kind of rally that we have seen. I think last I was on your show was on 12th of March, and on that day I had said that the Nifty is looking like the bottom is ready to form and we should be heading higher from there. So all the indicators, technical as well as fundamental as well as market breadth indicators, were pointing that markets are likely to rally, and that is what has happened. So right now, if Nifty were to close at this level where it is right now, then it will be the highest weekly gain for Nifty in 4 years. So this is weekly. Nifty is in a very strong momentum, and it seems that the momentum should continue at least for the next week. So the levels for next week to watch out for will be 23,800. So any dip that we get towards 23,000 levels should be bought into, and with a target of 23,800. So that's what we are looking out for. Now in the stocks front, we like Bajaj Holdings. So Bajaj Holdings has been a very strong performer in the entire downtrend that we have seen from September. So it is one of the few stocks which is trading higher than where it was trading in September 2024. Currently, it is forming a symmetrical triangle pattern, and it's likely to break out on the higher side. So the stop loss for this trade would be 11,500 for a target of 13,500. And another stock is Coal India. So Coal India has also seen a good enough correction downtrend in the last 4-5 months, and right now it has formed a good base and is likely to move higher. So the stop loss for the trade will be 380 and a target will be 440.
Indeed, Apurva, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. 23,800 is the level that Apurva recommends to watch out for going into the new week. We take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC-TV18's all-new app, where you get instant access to breaking news and financial world updates right at your fingertips. You can download the app from the Google Store or the Apple Store as well, or you can scan the QR code that comes up on your screen to get the app. Take a short break, back on the other side. Welcome back, and 23,375, 185 points higher on the index now. And some of the movers in the broader markets, they are seeing some very, very sharp moves. Redington is one of them, 10.5% higher on the stock. Tejas Networks continues to be the top gainer on the Nifty 500, 15% higher, continuing to hold on to the gains, as is Jupiter Wagons as well, 11.5% higher on that stock as well. A stock that has come up in the last few minutes is Nuvoco Vistas, and that stock has seen a surge of around 8.5% now, and most of that surge has come in the initial part of the session as well, but still holding on to gains of around 8.75%. But the other one that's doing well today is United Spirits, of course, with the Friday cheer that the markets are facing. And Citi has upgraded the stock and it believes that earnings growth is likely to remain resilient. Whether United Spirits does well or not, the street would like it. But Mangalam, what's Citi expecting here?
You know, I'll tell you one thing. This is the classic case of the market doing extremely well. Citi was positive on United Spirits. What the street has done is chosen to ignore the leader as much, and they're looking at the macro tailwinds for the industry. And look at what Global Spirits is doing. Global Spirits is up around 4% right now. We have Tilak Nagar Industries, which is up around 6% right now. So they're looking at United Spirits in light of the positive note that is coming from Citi, but they're also taking the positives from that and giving it, color with a lot of the stocks which have actually seen a big cut from the top itself. So that's the short point here. But United Spirits nevertheless higher in today's trading session. Citi's upgraded it to buy, target of 1650. What they're saying is that the trends for premiumization look good, and that's largely because of the stuff that the company has done on account of increasing the prestige and above volume contribution coming by, and as a result of which earnings for them are likely to remain resilient. More importantly, from the alcohol industry standpoint, regulatory tailwinds are coming in as well. We saw the changes that happened in Andhra. We are expecting some sort of changes coming by in the UP as well. So the route to market changes are the biggest delta for all these businesses itself. So that's a positive that has come by along with the underlying macro, which is doing well. The only fly in the ointment all of last couple of years was the massive rise that we had seen in ethanol prices and glass prices as well. So inputs are now likely to be, more or less moderate or at least contained. So that could be positive from a margin standpoint as well. The company is looking at, further productivity enhancement and revenue growth management as well. And if, there is any deregulation in Delhi that happens after the election verdict that has come by, that could further aid in, near-term volume growth and long-term positive growth coming in for United Spirits. Add to all of this, you have the leadership transition that is taking place as well. Strategic initiatives under the new MD and CEO Praveen Someshwar, who takes over from the next financial year itself. So all ingredients in place for the bubbly to pop. Let's see whether it does or not.
Oh, they're absolutely cheering, and how in high spirits, as they like to call it. Well, in all of them, United Spirits, Global Spirits, Tilak Nagar Industries, all of them doing well. And well, the Friday cheer on the markets as well. By the way, just mentioning, pull up Bharti Airtel just before we get to Amakshi on the defense names. That stock has seen a bit of a drop from the highs of the day, and it's been a very swift one as well. It's turned into the negative now, as Bharti Airtel at one point was at the highs of the day. It's 1700 rupees of the stock now. It's seen quite a bit of a run up as well, but keep an eye out on Bharti Airtel. But defense stocks are the ones in focus, and that is after the Defense Acquisition Council approved defense proposals worth over 54,000 crore rupees. Vamakshi is here with more details on that. Vamakshi.
Well, Horma's defense stocks are also in high spirits today. The Defense Acquisition Council, that is the DAC, has gone ahead and approved 8 defense proposals worth over 54,000 crores. And under these proposals, they will acquire the following. Number 1, 1,350 HP engines, 4090 tanks, and the key beneficiary of this is expected to be EML. Apart from that, they will also be acquiring Varunastra Torpedoes Combat, which is an indigenously developed ship-launched anti-submarine torpedo. On the back of that, keep an eye out on BDL, that is Bharat Dynamics, as well as Bharat Electronics, or BEL. Apart from that, airborne early warning and control aircraft systems will also be sort of acquired, and therefore we'll be watching out for beneficiaries like BEL, Astra Microwave, as well as data patterns. Now, in addition to this, what the DAC has also done is they've gone ahead and approved guidelines for reducing the timelines at various stages of the capital acquisition process, and they're doing this to make the process faster, more efficient, as well as more effective. So therefore, this bodes well for the overall defense pack, and all of these counters are surging in trade.
All right. What about you, Vamakshi? Are you in high spirits as well?
Friday fever Mangalam today.
Take that point. All right. Take a short break on that note. Get you more on the markets and a lot of other stocks on the other side. We're now on a couple of these Aditya Birla Group companies. Grasim has actually moved higher in today's trading session. We've also seen some traction coming by in Hindalco. In fact, the Aditya Birla Group chairman Kumar Mangalam Birla has announced a 45,000 crore rupee investment plan for Hindalco's copper and aluminum business. Speaking at the launch of Hindalco's new brand identity, he added that the investment will be used to deliver both upstream and high-precision engineered products to customers. Hear him out.
Birla Copper, for example, is setting up India's first e-waste recycling plant, extracting and recycling metals from discarded devices. And we are committing rupees 45,000 crores across the aluminium, copper, and specialty alumina businesses to deliver both upstream as well as next-gen high-precision engineered products to our valued customers.
Kumar Mangalam Birla there. In fact, my colleague Madiha caught up with Satish Pai, who is the managing director of Hindalco, to discuss this new investment plan and a lot more. Listen in.
We have been known as a large upstream player providing aluminium and copper and being seen as a commodity player in the market. I think what it does for us is position us as a value-added engineering company that provides more high-tech, high-end products and solutions. So I think what this does is that it positions us in the market where our customers will come to us for new products, new solutions. It allows us to be an integrated company, so we will be upstream and downstream combined, so that Hindalco shareholder can play the commodity cycle much more smoothly, because large part of our EBITDA today, it's 60% coming from non-commodity prices linked revenue, and I think going forward this percentage will increase.
All right. So do you see aluminium prices rising due to the tariff talk that's happening?
So I don't know it's because of the tariffs, but it's certainly true that aluminium prices in the last couple of months have been quite high. I personally believe that next year the LME should be between 25 and 2600, even though you could have short-term fluctuations because of all these announcements that go on right now.
So on the tariff front, how do you think, or how do you expect the tariffs to impact your business?
So I think that, I have been on record for saying that tariffs that are announced by the US are sort of neutral to mildly positive, because we have a large business in the US.
All right. Also on the investment of 45,000 crore, could you give us some idea on how you're planning to deploy the investment, and also how you're planning to raise this money?
So we have also been on record saying that we are going to now in this next phase expand our upstream capacity. So alumina refinery, a new one, aluminium smelter expansion, a copper smelter expansion, a copper recycling plant, and also downstream projects like aluminium foil for lithium-ion battery, fused alumina, the specialty alumina for the steel industry. So a combination of upstream and downstream. And Hindalco's balance sheet is extremely strong right now. We are net debt to EBITDA negative, and we generate a lot of cash. So our feeling is that we should be able to largely fund this capex from internal accruals.
Okay. And lastly, sir, what is your outlook for the fourth quarter?
I think that you will have to wait till the fourth quarter ends, and we will be making our analyst call sometime in May.
Hindalco Managing Director Satish Pai in conversation with Madiha. Just before we take that break, pull up Manappuram, because that is continuing to go from strength to strength. Now 10% higher on the stock, and it is also now trading above the open offer price of 236 rupees. So 238 on the stock now. Almost 10% higher is Manappuram. Of course, mind you, the stock is in the FNO ban, but as Mangalam was highlighting, with the way the open interest is declining in the stock, it may well come out of the ban as well sooner or later. Possibly the stock of the day so far is Manappuram. Take a short break. On the other side, Manisha Gupta joins in with Vikram Dhawan, who is the head of commodities and fund manager at Nippon India Mutual Fund. We'll be right back. Stay tuned.
Welcome back, and joining us on the show now is Vikram Dhawan. He's head commodities and fund manager at Nippon India Mutual Funds. Vikram, hi, thank you for joining in. And, you know, with the way the gold prices are moving and the investment seems to be coming around, would you say that the narrative behind the whole gold story now seems to be changing?
Thank you very much for inviting me on your show, Anisha. Well, gold rallies in the past decades have had different flavors. I mean, if you look at the gold rally prior to COVID, it was very much driven by the ETF flows, the global ETF flows. During COVID, obviously, it became a hedge for anybody and anyone who could lay their hands on gold. The post-COVID narrative has been very, sort of stark by the domination of the flows by the central banks. Where we saw some spike in central bank buying way back in 17-18, but I think it was punctuated by COVID. So I think every gold bull market is different in terms of the factors which are driving. Now, 2025 has started with a bang for gold. There, obviously, with everything being equal, we have seen, a very strong, investment demand for gold. Now, just to share with you that from the COVID peak of December 2020 till date, the gold ETF holdings globally are down by about 25-30%, roughly about, it was down by almost 1,000 tons middle of last year, but they're still down by about 800 tons. So they have been negative, flows as far as investments have been concerned. But they have picked up very significantly in 2025. Just to give you an idea, first couple of months, we have seen close to about 100-150 tons of flows from global ETFs. So I think,
absolutely.
So I think the narrative would change. Obviously, at higher prices, we will see some scaling back of physical demand, but it remains to be seen how much of that physical demand will be picked up by central bank buying and investment demand. If you really ask me, I think investment demand is going to be the key in 2025 as far as the gold bull market is concerned.
Vikram, that exactly was my next question. So while we have seen retail jewelry demand continue to decline, and not just India, but in China and various other countries as well, when it comes to investment and keeping central banks aside, when you look at retail investment demand, do you think ETF is standing tall?
So I think Indian investors have benefiting from the virtues of gold ETF, the liquidity and being, very well regulated and being fully backed by physical gold. So I think and obviously the convenience and today everything is bought or sold on your handheld devices. So, ETFs tick all the boxes. But I think, yes, there is an element of, a question mark on where the physical demand will go in 2025. Still early days. We still have to see what happens during the season, especially in India, because India and China combined account for roughly about 50% of the global physical demand. But I think what we've also seen in China and India is that, a spurt in flows into ETF. Still, the flows are very, very incremental compared to the physical flows. For instance, in India, hardly 3 to 4% of the total flows come into, gold ETF. But I think some slack will also be picked up by the flows into gold ETF. And just to give you a data set that if you look at the Indian mutual fund ecosystem, the gold AUM is roughly about 1% of the total mutual fund AUM. So we are nowhere close to that 5% what the wise people suggest to have in your portfolio.
Clearly. So how far are we, Vikram, when it comes to treating gold as an asset class which is mainstream?
So I think, obviously, if the US, the news emerging out of US turns pretty grim, especially for the so-called global South and Europe, etc., then I think you can see some tectonic shifts happening in the currency markets. And I think one of the reasons why flows have picked up recently in gold ETF is because there is some concern about currency volatility, which really accelerated, once the new, regime was, elected in the US. So I think if we see persistent, uncertainty in the currency markets, if we see, protracted volatility in the risk assets like equity, I'm not trying to say gold will become mainstream, but I think you will see the interest and the allocation to gold, going way beyond the historic high. Even today, also the global holdings, as per the reports by various agencies, global holdings today are somewhere around only 1% of the total portfolio value globally. Also, so despite the strong performance of gold, it is still under-owned asset class.
Wow.
All right, Vikram, thank you so much for sparing time and joining us today with your views on gold. All that is glittering is currently gold, with targets going up to almost $4,000. Manisha,
Yes,
thank you so much for joining in as well. We call time on this edition of Halftime Report. We leave you with the Nifty at the highest point of the day at 23,400. Business Lunch takes the action forward for the next 30 minutes.